Alright, I'm trying not to make this video too long. I was trying to be down by the water, but it's just too loud and too windy. So, and my battery's about to die. I'm talking about the top do's and don'ts when trading in the stock market. And this is not just for beginners, but this is things that I have to review myself all the time, because I constantly forget my own rules, which is kind of sad. But you know, when you first start trading stock options, do not trade stock that trades less than 1 million shares a day in volume. And the reason is liquidity. So if there's a stock that only trades 100,000 shares a day, you know, your chances of being able to buy a large enough quantity and make a significant profit are slim. And if it goes against you, it's going to be very difficult to get out of that trade. Because if there's only 100,000 shares being traded, and most likely that's probably a low price stock, one or two people could own all of that. I mean, I'm just making the numbers up, but you know, a handful of people can own all that stock. So if it goes against you, who's there to buy it? Nobody. Nobody's there. It's hard to get rid of. And if you get rid of it, you're gonna have to get rid of it a lot less than you think you're gonna have to get rid of it for. Don't average down, and what I mean by that, don't go like, you know, your stock goes against you, or if it goes up and then comes back down, don't go, well, it'll come back, and it goes down further and you buy more, and then it goes down further and you buy more. You're averaging your price down. Do not do that. Now, if you're trading a stock that you know is going up and you're already in profit and it pulls back a little bit, yeah, you can buy more and build your position. But if it just keeps going down and down and down and down and down, do not keep buying it as it goes down. It's terrible. That's called averaging down. You don't ever do that. Don't over trade. You know, you don't have to trade 10 trades a day. You know, just pick out the best possible trades and then find a better trade, and then find a better trade than that, and only trade those trades. You don't have to trade every day. You know, I recommend, like, when you first get into trading in stocks, only trade when the market's up, when the overall market's up, when the S&P's up, when the Dow Jones is up in the mornings, and you know, take profit as early as possible. So, you know, if you're up a couple $100, take it. Don't sit on it. Take your profit and get out early. Don't put everything on one trade, and this is huge because I did that. I lost over $20,000 on one trade, and that was virtually my whole account. So that's a mistake learned. Do not put all your money on one trade. You know, it varies for everybody. I really think it's personal preference, but you'll see people, don't trade with more than 5% of your account. Don't trade with more than 10% of your account. Well, you know, if you've got a small account, say you're starting with $500 to $1,000, 10% of your account is not really going to get you anywhere. You really can't even buy options contracts with that, at least probably not very good ones. Do not trade around earnings. You know, if you're a beginner investor and you're learning how to do research, do not trade around earnings, because people seem to think that earnings is more important than revenue, and that's not true. Revenue is much more important than earnings. That's why you see people, oh, Apple beat earnings, and then take a shit. Stock goes downhill because they miss revenue. And also, if you're trading options, volatility increases going into earnings, which means the minute earnings is over, all that volatility is gone. So if the stock doesn't move at all, you're automatically losing money. Or if it drops, it's going to drop dramatically because there's no volatility left. Another big one, especially for beginner traders, and this is something I don't even do myself, maybe if you had a huge account and you had a lot of money to spare, do not sell naked options. Do not sell naked call options, because it's no different than shorting stock. Your loss is infinite. Huge risk there, huge reward as well, but huge risk. I don't recommend it for any beginners. Again, this is just kind of saying what I said earlier. Don't have that it will come back attitude. It'll come back. Oh, it's down $1. It'll come back. Now it's down $2. It'll come back. Now it's down $3. Well, you could have got out when it was down $1. Now you're hurt, and it's not coming back. Get out early. 7-8%. Cut your losses. You're gonna have losing trades. If you cut your losses early, even if you could only win 50% of the time and still make money, because you cut your losses early, because your profit will be always greater than your losses as long as you get out early. You only make 20%, then you only lose 7 or 8. Then you lose 7 or 8. Then you make 20-40%, then you only lose 7 or 8%. So you're always making more than you lose as long as you get out early. It's huge discipline trading rule right there. Don't wait too long to take profit. You know, if you're up 20%, take it. Especially if you're new, you're up 20%, take it. If it drops down, you can buy back in. You know, if it goes up, don't go, oh, I missed out on that money. You can't think like that, because it can just turn against you. It's happened to me, it's happened to you, I'm sure it's happened to everybody. It goes up, up, up. Oh, I'm up 500 bucks. An hour later, I'm down 500 bucks. Take your profit. Don't wait too long to take your profit and run. Take your money and run. You got to realize, like, that's something I didn't realize when I first started trading, is I was making in 15, 20 minutes sometimes what I was making originally at a regular job in a month. I'm like, oh, I'm at 3,000. I can get more out of that. Hello, that's a month. That's literally a month income. Take the money. Take it. You know, it's better to miss out on a little bit of money and be able to live the next day and trade than lose your account. Do not trade with money you cannot lose. Don't trade with your rent money. Don't trade with money you owe to somebody else. Don't trade with your rent money. Say, oh, I can turn my $500 into $2,000, and then I'll be ahead, and then you lose that $500, and now you don't have a place to stay because you can't pay your rent. Don't do that. Don't trade with a gut feeling. If you can't find at least 3 things in logic, like to trade that you're looking for, don't trade it. Don't go, oh, my gut feeling says it's going to go up. My gut's telling me it's going to go down. I got this funny feeling. No. It doesn't work that way. Trading does not work that way. If you can't find logic and a reason to trade, stay away from it. If you can't pull up a stock and go within like a minute or two and go, oh yeah, this is something I want to look at later, write it down in my notes, don't need to trade. Because now you're just forcing yourself. Now you're looking for something, a reason to buy or sell that stock. If you can't see a reason to do more research into that stock, or look into it later, or trade it almost immediately or within a minute or two, do not trade that stock. Move on. There's thousands of stocks. Find another one. Throw that one in the trash for now. Maybe look at it another day. I'm going to skip on to things you should do, especially as a beginner trader. Do your own research. You know, by the time something hits the news, it's already too late. Everybody knows about it, and you can't say it. I mean, I've met some people that says, oh, Joe Schmo told me this stock was going to go up, and then I think he's a guru, and he buys it and it takes a shit. You have to do your own. You have to absolutely do your own research. Don't rely on somebody else's information, even if you may think it's true. Do your own research. Back it up. Ask 4 or 5 different other people. Go to multiple different sites and make sure you get the same answer at every site. If you're a beginner trader, only trade on days the stock market's up, like I said before. And you can, you know, like I said in the past, on the don'ts, don't average down, but do average up on your winners. You know, maybe if you're trying to build a big position and you're looking for a big you got a stock that you think is going to make a big move, maybe it's coming off a bottom and you're making a long-term trade, maybe a little bit, like maybe you're buying an option like 2 months out, you could build your position by averaging up. So maybe every time your option's up 5 or 6%, buy a couple more options. You know, start out with 10 and then you buy the option goes up 5 or 6% and you buy a couple more options, and it goes up 5 or 6%, buy a couple more options and buy a couple more options, and then sell half and lock in your profit. And now even if the other options go to 0, you still either break even or make a profit. That's another thing, you know. If your stock's going way up, sell a quarter of it, sell half of it, lock in your profits. If you're just now getting into options trading as a beginner, only sell covered calls. I can make a video going in detail with that. I'm not going to get into detail with that because that's not what this video is about. But if you're a beginner, look up covered calls. If you don't know what a covered call is, look on Investopedia. Get on Amazon. There's a million different books on options, especially for beginners. Learn technical analysis. There's a lot of good books on technical analysis. One of my favorite books is Japanese candlestick charting. You can get it on Amazon. I'd say good beginner to novice. There's towards the end of the book, there's a little bit more advanced stuff. It's going to take you some time. Take a lot of notes. Definitely recommend that book. Cut losses early, no more than 10%. Be patient. You have to learn. This is something all traders have to go through. You have to learn to be patient, disciplined, and take your emotions out. Take the anxiety out. Focus. Whatever it takes to get you there. for me, I blare music like so loud, like I'm just, so my mind isn't racing, and all I can hear is either the music and what I'm looking at on the screen. Whatever it takes to get me there. Headphones, whatever. I'm not, oh gosh, I'm in a hurry, I'm in a panic, I gotta make a trade right now. And you start making huge mistakes. You push the wrong button, you buy a call instead of selling it, vice versa. You put the wrong amount of calls or puts in, or you get a trading violation because you don't have 25 grand in your account, and you in and out of a trade too many times. Just be patient, stay focused, be disciplined, take your emotions out of it. It's very difficult. It's a lot harder than you would think. It's a lot harder than just saying, I review every trade a couple times. You'll get faster at it over time. Review your trade before it'll even give you, I use E-Trade, so like it pops up a message saying, are you sure you want to make this trade? Buy 10 calls, XYZ stock at such and such bid or ask price or whatever limit order. Double, triple check that before you send it. Watch Fox Business. Man, Fox Business is awesome. It's a great thing to watch in the morning. I watch Fox Business. I watch the Barney and Company. I watch Mad Money on CNBC after the markets close. And I don't, like I said, do your own research. Don't just listen to these guys. Just get information and ideas and learn about the stock market, what they're looking at. Do your own research. Maybe there's a stock out there you never heard of before, and it pops up on there, and you can go, oh, okay, I don't know what that is. I'm gonna look into it. Take a lot of notes. It's a good thing, especially for beginners to look into. I watch Mad Money all the time. I've got another book just like this, just Mad Money every day. Just not, I wouldn't say every day, but as much as I possibly can. Even look right here, Mad Money notes from 12/13, 12/14, 12/18, 12/20 on the back. Constantly taking notes from other people, but I always do my own research. And I plan out my trades. That's another huge thing for beginners. Plan out your trade. Start with a small group of stocks, maybe 5 stocks. Like, I like these 5 stocks. These are the way I plan to trade these 5 stocks in the morning. If the market's up, I'm gonna buy 10 calls of this or 5 calls of that. I'm only gonna make 1 or 2 trades and sit, be disciplined, be patient, watch the market, watch the news, learn from anything that the market does, any news that comes on, learn how it affects that stock, take notes, plan everything ahead the night before. That way you don't have to get up frantically in the morning trying to find a stock in the pre-market, going to the pre-market, going through it and just digging, and it forces yourself into a trade, and you get in a panic and a hurry, and you make a big mistake. Don't do that. I know it's kind of a quick rundown. It's getting dark. It's getting kind of cold. It's really windy out here. My battery's about to die. But I just wanted to make that quick video. I said I was going to make it, and I haven't been able to get my camera out for a couple days. I've been super busy studying. I've got the Series 65 test coming up. I'm flying to Atlanta to take a class for the Series 65. Just a lot going on. I'm looking for a condo at the moment to buy. A lot of things are going on. So I've been able to get my camera out and do this video. But just wanted to make this really quick, short video for you guys.